My name is Kyle Demian with the Wealth Academy, and in this video, we're going to be exploring your retirement options inside of the TSP, or the Thrift Savings Plan. The TSP is offered to federal employees once they start working for the federal government. My team and I have helped a lot of federal employees, and somehow, some way, we have found that a lot of federal employees have no idea what the TSP is, how it works, what the different fund options are for. So that's the purpose for me recording this video, walking you through the TSP's website and understanding what the different fund options are, and to give you an idea of what options you at least have. Now, this video is not intended to be financial advice. Always seek, the help of somebody working one-on-one with you, but this is going to be purely educational so that you know what options that you have available to you inside of your TSP. So with that, let me start sharing the screen and let's go through it. So the TSP website is simply tsp.gov. And when you come to this landing page, number one thing that I want you to know is that there's a lot of information on this site, and very, very good information. What I'm going to show you today is just specifically the fund options that you have. So as I click on fund options and go to the individual funds, I first want to start it off by showing you the safe funds versus the more riskier funds. And I'll talk a few seconds, as actually you can see they have like a risk bar here at the bottom. But simply enough, we're going to start with first the G and the F fund. Now, these are the two safer funds or lower risk funds that are available with inside of the TSP. So the G fund, you can see this is the Government Securities Investment Fund. It is based on short-term U.S. Treasury securities. Okay. As you're looking on this, what I really like about this site is they also give you the returns year to date, over the last year, what it did, or even the last 10 years, or even over the lifetime. Now, as you can see with the G fund and the F fund, over the course of its lifetime, they have averaged about 4.5% and 5% returns. However, and maybe this will be another video, but looking back at the G and the F fund over the last 10 years, they've only returned about 2.5 and 1.64% respectively. Now, the F fund, I realize I didn't talk about that just yet, but the F fund stands for the Fixed Income Index Investment Fund, which is based on the Bloomberg U.S. Aggregate Bond Index. Now, the F fund, once again, has averaged 5% of it over its lifetime, but only 1.64% in the last 10 years. Now, that's important to know. And I tend to look at the years or the numbers over the last 10 years. The G fund and the F fund used to do really, really well back in the late 80s, 90s, even in the early 2000s. But as it's come over the last 10 years, they have been lower performing funds. One other thing to note and to understand is that the G fund will never have you losing any money. It is impossible to lose money when you're in the G fund. However, in the F fund, there can be some negative years, but it does have lower risk than the stock fund options that we'll look at just here in a moment. And you can actually see that over the last 5 years, the F fund has actually averaged a negative return, about negative 0.5%. Okay, so these are the fund options for your safe money, or maybe the money that you don't want at too much risk. If you're getting closer to retirement, maybe you're considering some of these funds. Right now, what about for the funds where you can be more aggressive, or you want to be more aggressive, and you want to take some opportunities in the stock market? That's what the C, S, and I fund are for. The C fund is the Common Stock Index Fund, which matches the performance of the S&P 500, or the top 503. There's actually 503 companies that are inside of the S&P 500. The S fund is a small cap stock index investment fund, so it more so manages and mirrors the Dow Jones. And then lastly, the I fund, which is the International Stock Index, and this matches the China Hong Kong Index. And so the I fund is invested overseas, I for international, right? And as you can see here, once again, it gives you the returns year to date, the last 1 year returns, 3 year return averages, 5 years, 10 years, and so on. Now, for these, you can look at either the 10-year or the lifetime returns, and you can see that they're fairly similar, fairly close. And so over the lifetime, the C fund has averaged about 11% returns over the last 10 years. The stock market has had a really great bull run. So it's averaged about 12.96% returns. The S fund, you can see about 9 and 9% returns over the last 10 years and over the lifetime. And the I fund, only about 5% returns over the last 10 years and life. It's not based on anything here in the United States. It's a great vehicle and a great fund if you want some diversification from a fund that's not involved in the U.S. economy. And you can see down here, they do rate the risk of the different funds. The C fund kind of being like right in the middle of medium risk. And that's because probably it's based on the top 503 largest companies inside of the United States economy, right? The S fund has a little bit more higher risk. And of course, the I fund, because it's international, it will have the highest risk of the total options. Now, this does show as well the total expense ratio, which this is another great thing about the TSP. The expenses or the fees are very, very low. One of the benefits over the TSP compared to more like a traditional 401k, 401ks can have a lot higher fees usually than the TSP does. So that's another great benefit to the TSP for federal employees. Now that we understand the individual funds, though, one other thing that you should be aware of here inside of the TSP are these life cycle funds. Now, life cycle funds are really unique and they're set up to be more so like a target date retirement fund, meaning whenever your target date that you're retiring is, that year, that correlates with these years going down the sides. Better yet said, if you plan on retiring around about the year, let's use 2030, for example, the life cycle 2030 and is set up for you for the approximate risk tolerance that you should take over time. Now, if you're going to retire here in maybe 2055, maybe if you're about 30 years away from the date of this recording, you would look at like the L2055 fund. Now, the unique thing about this, and actually, let's just click on the 2055 fund and go down here. Number one, what I love, it goes and actually tells you, why should I invest in the L2055 fund? And just like it says here, you should consider investing in the 2055 fund if you were born between 1990 and 1994. Or, and this is probably most importantly, when you plan to withdraw. If you plan to withdraw your account between the year 2053 and 2057. Okay. Now with this, am I okay? Yeah. So this asks about, who is this for? This is more for the long-term investor. And then lastly, how can I use my L2055 fund in my TSP? Your investment in the L2055 fund will help you to achieve the best expected return for the amount of expected risk that is appropriate for your time horizon. So people retiring in about the year 2055, they have a long time horizon. So this account, this life cycle fund is going to be set up with that long time horizon in mind. And what I mean by that is when we scroll down, you can see that just less than 1%, 0.99%, let's just call it 1% of the 2055 fund will actually be in the G and the F fund. And you remember the G and the F fund were the lower risk funds, were basically the safety funds. So because you've got a 30-year time horizon, you don't necessarily need to have your money inside the G and the F fund because you can ride the waves of the market and that'll probably prove to be beneficial for you over time. Now, on the other side, just to show you guys what I mean by the different, the diversification of the funds, let's say that you were going to be retiring, let's just use 10 years from now, and let's look at the L2035 fund. Now, if we scroll down here, you can see how now the G and the F fund has about 33, technically 34% of the money inside of the TSV, inside of the life cycle funds that goes to the G and the F towards the safe options, while they keep the other, what is that, 66 or so percent that is going to be at risk in the different stock options. So the C fund, S fund, and I fund would make up about the other 66 or so percent of the portfolio. Now, this is still if you're in the 2035 fund. And then lastly here, let's just look at the 2025 fund just to show you a comparison. So the other one was at just what, 34 or so percent safe, 34%, on the risk off side or safer options. And then here, if you're in the L 2025 fund, meaning that you're retiring about now or within the next year or two, this would have you more so at about 70%. Yeah, almost 71% on the safe side, on the risk-free, safer option side of their portfolio. And then you have less money in the stock market. Reason being for that, if you're going to be retiring here soon, what they've deemed, I guess, appropriate for you is that you be way more conservative because you're so close to retirement and you don't want a huge market crash, delaying your retirement or impacting it significantly. Because imagine if we have a 40% market downturn like we did in 2008, that would hugely affect when you're going to retire. That would be $1 million going down to 600,000. And for most people, that would have them continuing to work for at least another few years, right? So the 2025 fund, 2030 fund would have more of your money allocated to the safer fund options that are available. So the L 2025 fund's investment objective is to achieve a moderate level of growth with a moderate emphasis on preservation of assets. The GFCS&I funds are adjusted quarterly. The L 2025 fund will roll into the L income fund automatically in July of this year, 2025, when its allocation becomes the same as the allocation of the L income fund. L income fund is the last one. This is designed if you're taking income off of your portfolio, off of your TSP. And you can see right now they have it allocated to about 73, 74% on the safer side, while they keep the remaining, what's that, about 25 to 27% in the stock market for some upside growth potential for you. So hopefully this was helpful and gave you guys an idea of what fund options are out there. Now, if you're confused and you don't necessarily know which option, which fund is going to be the best route for you to go, that's why the L funds, the Lifecycle funds, were created. Those are meant to be a set it and forget it type of fund option where the TSP is automatically going to adjust that over time for you as you get closer to retirement. As you get closer to retirement, you should become generally more conservative with your investments just because of what market risk can do to your retirement and just the uncertainty that it leads. So I hope this video was helpful. If you got anything good out of it, leave your comments below and make sure to like the video and to subscribe if you like this content on retirement, on TSP, and learning more about how to optimize and to prepare for retirement. Now, if you're getting close to retirement and you have questions about maybe what some of your options are or what you could do to kind of optimize it, that's what I can help with. I am a retirement income specialist and we help a lot of federal employees. So if you made it to the end of this video, I will offer you the opportunity for us to meet and chat one-on-one, no cost to you, a free consultation just to see if we can even help. And here's the thing I'll tell you, if I can't help you, I'll be the first one to let you know, number one, that I can't help you, and I'll be sure to try to point you in a better direction than working with us. So below this video here, you should see a link to thewealthacademy.com. That'll take you to our website where you can go and book a consultation to chat about, your TSP and retirement and to see what options that you have. I hope this video was helpful and we'll see you guys on the next video. Take care.